Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm an education coach and a senior manager here at Schwab, and this is Getting Started with thinkorswim. And I've been around this thinkorswim platform for a long time, and I've definitely encountered some misconceptions about the platform itself. Today, we're going to be clarifying 5 of the most common misconceptions or the most misunderstood tools and features on thinkorswim. So I'm looking forward to this discussion. I think it's going to be enlightening for just about everybody here. Before we get to that, though, let me first of all say hello to everybody that's chatting in there in YouTube land. Great to see David and Speak Truth, Will. We have Joe and Eva, Bob, Kevin, Ahmad, Life in the Fast Lane, Chris, everybody else. Thanks for joining us week after week. We always really do appreciate your attendance and your contributions here. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, if you weren't able to make the live presentation, that's great. Watch it on the recording. That's terrific. But if you'd like to be here for the live presentation, this one kicks off on Mondays at 3 Eastern. So we'd love to have you here. Also want to let you know that you can catch me in between these live streams on X. So if you're not following me there, you can find me there at Cameron May CS. I'd love to have you there as a follower. It doesn't cost anything to follow on X. But let's get right into this. The first thing that we need to discuss, of course, are the risks associated with trading and investing. So bear these disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as sole means of investment research. Investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right, but let's go right to the thinkorswim desktop platform. And as we do that, this actually brings me immediately to misconception number 1, that I get this all the time. People will say, Cameron, I wish, I'm here on my paper money, and I wish that I could just quickly toggle over to my live account instead of having to close down my paper money after some practice trading and then open the live account so that I can place the real trades. And actually we can. A lot of people are not aware that we can have both platforms open the same time on the same device, on the same computer. So once we've logged into one, and it doesn't have to be done in any particular order, I just happen to have my simulated trading account, the thinkorswim paper money, open. But if we wanted to open up live, here's what we can do. Just go right down to the thinkorswim icon. We could also just, double click on your desktop icon. But down at the bottom in the bar, we can right click on that icon and just select thinkorswim again. And that's going to bring up the login screen, and it has no problem, no conflict, as long as we're just logging into the other version of the platform. We can do that right here. So as I do this, let me give you one thing that I prefer to do. It's always a preference. Not every trader is going to do things exactly the same way. But one way that I like to keep them both very cleanly separated is that my paper money, I have it with the white background. With the live platform, I have it black background. So there is never a question in my mind which one I'm using, even though we do have those other obvious prompts that are always on display, for example, saying simulated trading on paper money. So let's quickly change the color scheme for this separate login to dark, save that. And then we type in our username. I'm going to move that off screen for just a moment, just so I can preserve the privacy of this username. There we go. That password doesn't matter because it's just going to show up as a series of dots for you. So let me finish getting logged in here. There we go. And as I click login, look at this. It's having no problem. Logging right in. And I'll show you this little navigational tip, because those that want to be able to just tab back and forth, that can now be accomplished. Look at this. If I look down here, there are both platforms, and there is no problem distinguishing between the two. So I'm going to flash back here to our paper money, and this is where we're going to finish out the rest of our demonstration about these five most misunderstood tools and features. So I think already there are going to be a bunch of light bulbs that just went off. So if that's your first time seeing that, hope you enjoyed that. But let's talk about the next thing. And I have a very good example in this paper money account right now. Now, our live platform, our paper money, one of the great features is that they are so similar. There's so much interlap, they almost seem to be absolutely perfect. But it's not exactly, the thinkorswim paper money is not an exact duplication of the real live trading environment. There are a few little differences here and there. Now, one of those differences has to do with what are called corporate actions. A corporate action is when a corporation takes an action that can affect its stock value in some way, and included in that are stock splits. So let me show you this, just to set the stage for this next tool. Here's NVIDIA. We own 30 shares that were purchased during a live presentation back on November 13th of 2023, and yet somehow we've managed to lose $10,000 on 30 shares of NVIDIA. I don't know who else has been following NVIDIA, but how do you lose 10,000 bucks on 30 shares of NVIDIA on a stock that's just gone skyrocketing since November? Well, the answer is that thinkorswim's, the paper money does not adjust for stock splits. So be aware of that when a corporate action is taken. It doesn't always adjust for that. However, that's not necessarily a bad thing, because we can do our own little manual adjustment. It's not a big deal, but it also highlights one of the nifty features of thinkorswim. It allows me to bring attention to this. So the misunderstood tool here is that once we've taken a position, it can appear that we're stuck with the position in our paper money. That's not true. We can actually adjust these positions. So I do want to revisit what happened here with NVIDIA. So specifically, if I click on our quantity here, shows us that we bought these shares on November 13th. 30 shares were purchased at a trade price of $482. Okay, keep that in mind, $482, because if we go to a chart of NVIDIA, here's where we purchased those shares, and yet the stock is way up here at $141. Wait a minute, we bought down here, stock's up here, but we're losing money hand over fist. What happened on, I think it was June 7th? June 27th? Yeah, there was a stock split. So right there, where did it happen? June 27th, right there. There was a 10-for-1 stock split. So what happened in a real account, if someone had 30 shares in their real account, well, those 30 shares were replaced with 300 shares, and essentially their cost of those shares was cut by 1/10, or cut by 9/10, I guess. Anyway, reduced to 10% of the original purchase price. But we're still looking at the unadjusted quantity and the unadjusted trade price. So I'm going to change those. Now, chat in yes or no. Let me know if you knew that you could go in and manually change things like the share quantity and the purchase price in thinkorswim paper money. Here's how that's done. We can just go anywhere here along that position line, and I'm going to right click on that, and we're going to adjust that position. Now, the first thing that we're going to do is take away the 30 shares that are now erroneously displaying a purchase price of $482.03. So I'm going to adjust the quantity by minus 30 at a price of $482.03, because the original quantity was a plus 30 at $482.03. I hope that makes sense. Freddie, you didn't know you could do this? Now, there are other circumstances, not just stock splits, where a trader might choose to do this. Maybe they did a trade and they thought, yeah, that was dumb. Why did I even do that? I was just playing around. I don't want that in the portfolio anymore. Well, we can erase that performance basically by just coming in here, putting in a negative quantity at the same price. And that now becomes a non-event, okay? But what I'm going to do now is right-click here and adjust that position again, and we're going to say our quantity, our post-split quantity is going to be 300 shares. At what purchase price if we're cutting that down to 10%? That would be $48.20, right? Let me click OK again. So now we have 300 shares. But you say, haven't used paper money in a while? That's all right. Not everybody does, right? Once we get past a learning curve, maybe we don't go back to that. But this is now correctly displaying sort of a post-split scenario. We actually do have 300 shares, and if they had been adjusted correctly down to 48.20, that just changed what was a $10,000 loss into a $20,000 or a $27,000 profit. That's corrected. Yeah, Kevin says, any way to do that in a live account? Still working on that technology, Kevin. I'll get back to you. Anyway, but I think you can imagine where that could come in handy if you have some other position that you're thinking, this was just a one-timer, I didn't need it in there, I want to adjust that out. But also be aware that we can adjust the account itself. So by default, a trader receives in their paper money portfolio, you have just a cash account or a margin account and an IRA. It's a fake margin account, a fake IRA, right? Just for practice. And each one of those are pre-funded with $100,000. Well, what some people prefer to do, I'm not saying that everybody should do this, but some prefer to do it, is they adjust the cash balances in those to reflect more of a reality for their own portfolio. Maybe match the portfolio size that they're currently managing in real life, so they can try to see if they can duplicate, get some real practice in their paper money that's more applicable to their own circumstances. That might require increase in cash, might require a decrease in the cash. But in any case, what we do is just up at the top, choose whether we're doing the IRA adjustment or the margin account adjustment, and then come over here to adjust account, and we can just set the cash. So right now we have, for example, $163,000. Let's say that our trader actually has $150,000 in their portfolio, and they wanted to start off with $150,000 in cash. Just type in whatever quantity is desired there, and then you can also select which account here, but click apply and watch my cash up here. Click apply. And that just changed the cash. I did have the choice to reset all the positions back to the default to 100,000. It would have wiped all of these flat. Didn't want to do that. But with that, we're just going to leave that there. But that addresses one of the misconceptions about thinkorswim, which is that we're sort of stuck with our practice trades once they've been entered. And in particular, with like these splits that have kind of gone awry. In any case, now let's move on to sort of the misunderstood tool number 3, which is this one right here. If you attend my Managing an Options Portfolio webcast series, you'll see me using this tool, the beta weighting tool, all the time. And I am doing it in options series, so it can be misconstrued or misunderstood that beta weighting is really only appropriate for an options trader. It only holds potential value for an options trader. Well, right here are a whole bunch of stock positions, no options displayed there. But I do want to talk about what beta weighting is first. Beta weighting helps a trader anticipate how their portfolio is likely to perform if a certain benchmark goes up or down. Right? So in this case, we're benchmarking against the S&P 500. And specifically, the assumption of beta weighting is that our benchmark goes up 1 point. The S&P moves in points, and 1 point is a tiny little move. It's actually a 5,800 point index-ish right now. So it would take 58 points to move 1% for the S&P. But in any case, I'm going to check this box for beta weighting for our stock portfolio, but to make it meaningful, I'm going to need one other column here. And if you haven't seen this before, I think this will make sense pretty quickly. But I'm going to come over to the Customize Columns gear right over here. And let's add Delta. And you might think again, wait, isn't Delta for options traders? Not always. So I'm going to choose Delta. Let's move that up just next to our quantity column and click OK. So now there's the number of shares we own. And this is our Delta. And you'll notice when I've checked the box next to beta weighting and I have the symbol SPX, I get all these numbers here. What in the world do these mean? Well, basically, what these are telling us is this is based on a 5-year history of an association with each stock compared to the S&P 500. This is an estimation of how much our stock will make or lose if the S&P were to go up or down 1 point. So just remember, a little tiny fractional move on the S&P 500 tells us, oh, I might make 12 bucks on NVIDIA, I might make about $2.81 on DHI, I might only make 45 cents on Alphabet. That's interesting. right? But also possibly more interesting is down at the bottom. And Eva says, I tried beta weighting a few times. It confused me. Can be confusing, yeah. But let's try to make this as straightforward as we can. This bottom number, 2689, is just a total across all of our stocks. So what this is doing is it's estimating based on how these stocks have moved as the S&P has moved in the past. It's estimating for us how much the next 1 point move might make or lose for our portfolio just across all of our stocks. $26.89. That doesn't sound like a lot. This is a $300,000 portfolio. Now after making my adjustment to my cash, I'm gonna have to go back. Now I'll leave it alone. $150,000. That's fine. Anyway, a $26 move, a $27 move, even on just 1 point on the S&P doesn't sound like a lot. Let me do one extra thing. Since there are 58 points, it takes 58 points for the S&P to move 1%. Let's multiply 2689 by 58. And this is what this means. 1,559. What is that telling us? That's telling us that if the S&P were to move 1 point, or 1%, in other words, 58 points, this portfolio stands to make about $1,559 if it were to go up. If it were to go down, this portfolio might lose about $1,559 if the stocks behave like they have in the past. But what this can really do for our self-directed trader or investor here is they can decide, well, does that look good to me? If I expect a 1%, a 2%, or a 3% move up in the S&P, is this giving me the potential for adequate return? Let me exaggerate things for just a moment. Let's say that we thought the S&P is going to go up 58 points, and our investor looks at this and they look like they might make $10. Okay, so basically no potential, very limited potential for upside. Yeah, very limited potential to downside. But our trader might think, all right, maybe I need to dial up the heat in my portfolio a little bit. Maybe I need to buy more shares. It's quite possible they're just sitting in cash, so they can't make or lose money on the S&P because they don't have anything invested. Another thing is maybe they're just buying extremely stable, low, what we call beta, low volatility stocks. Maybe, if they want more upside potential, maybe they need to go buy higher beta stocks, higher volatility stocks. Of course, higher volatility comes with greater upside potential, but also greater downside risk. But just be aware that beta weighting, quite a popular tool among our options traders, can also have application for our options, for our stock traders. All right, for Checkout 2 says how to use the strategy roller. You're asking that question. I actually just did a webcast on that. If you want to just go type that in on our Trader Talks page, you'll find a discussion of that. But we have 2 other features that I wanted to discuss, 2 other misunderstood tools and features on thinkorswim. But number 1 is for some traders, they like to take a look at options charts. Speaking of options, it's quite easy to chart stocks, but I get the question all the time, Cameron, I just can't figure it out. I don't know how to, it doesn't look like you can chart options on thinkorswim. Oh, yes, you can. And it can actually be done fairly quickly in a couple of ways. One way is you can just go to your option chain, make sure that we've set our spread to single so that we're seeing all the individual options. And we can just go to the option of interest and right-click on it. And watch what shows up in the menu. It doesn't matter whether we do a right-click on the bid or the ask. But let's say I wanted a chart of the 142 call option for the 15th of November for NVIDIA. Well, I can just right-click here, and I can go to more information on that option, and we're going to bring up thinkorswim charts. Yeah, let's put it on a chart. Now, we don't need to go, it doesn't matter which one of these you choose in the grid. I'm just going to choose the first one. That actually brings up a chart of that option. The reason, now you might think, well, couldn't we just go to the charts and type in the symbol? You can, but symbols are kind of unwieldy on options nowadays. So that's a quick way to chart it. Or if we're already on the chart, we can just come right up here under the drop-down menu, go to the Options tab, enter our symbol there, and then get the options chain. It looks like it's going to take a moment to load. Anyway, the options chain will load there, and we can open it similarly. I don't know, sometimes, when I'm running a webcast, it can cause kind of a bandwidth drag and slow the system down. So that, I suspect that's what's going on there. But in any case, yes, you can chart options on thinkorswim. Now, by the way, there is a survey in today's session. So if you do me this favor, click on that survey link right now, and then just fill it out when the webcast is over, when you can give me some honest feedback. But I just always make the promise, in addition to this just being a very short survey, 2 multiple choice questions, and then a comments box and a suggestion box. But I promise you, if you fill out that survey, I'll take the time to read through your comments. I was just reading through all recent comments for this webcast series today, just as a reminder, questions that people have had. Yep. Yeah, for checkout too, just actually wrote out sort of the formula for knowing how to type out the symbol for an option. I'm not going to go into that, but yeah, thank you for doing that for the live audience. Okay, one final thing that I wanted to talk about, and that is, it's just a broader misconception about the thinkorswim platform in general, and that is, this thing's only built for traders. I'm more of an investor. Looks like it's more for chartists. I'm more of a fundamentalist. It's not for me. Actually, thinkorswim has some fabulous tools that you can explore in detail. I just wanted to make us aware that they are there. So for example, if we go here to the Analyze tab, we can find all sorts of economic data if we're trying to, follow up on what's been happening with the economy. Let's say we have some interest in what's been going on with prices. Prices have been kind of keen interest for traders and investors. I don't know, maybe they're the home prices. Let's look at house prices, maybe go to the Case-Shiller House Price Index. How many of you have gone in here and clicked on some of these and seen the charts that are available? Historical charts right up to the most recent report. That's pretty nifty. And did you see, I'm going to click on little home to take us back to the home page for this function, all of the data that's available. Lots of information that can be found there. Or maybe we want to look at an individual company, look at the strength of the company behind the stock. Well, a trader might go back to the Analyze tab and go over to the Fundamentals page. And here we could type in our symbol. I'll stick with NVIDIA, since that's the one that we've been talking about along for our example today. But this can provide us with a summary of what who NVIDIA is and what they do for a living, basically. Down below, we can see some key performance metrics and ratios. Even further down, we can see business summary, key trends. All of this is provided, by the way. This lower information is provided by Trefis. It's a separate and unaffiliated firm. But yeah, a lot of information that can be found about individual companies. And really, we're just really touching the surface. We also have on our calendar, if we go to Market Watch, you can go to the calendar and find conference calls that are coming up, summaries of those calls after the fact, Econo Day events, meaning economic news announcements and the outcome there, all that kind of information. And of course, you can do scans for fundamental strength. You can look at streaming news articles using the features in the left column. Yeah, don't be under the misapprehension that thinkorswim is only for traders. Lots and lots of good fundamental information that could be found here as well. But everybody, we've done it. That's 5 of thinkorswim's most misunderstood tools and features. I hope you enjoyed that discussion. What were some of the tools that maybe you misunderstood, or maybe you're not quite clear on? Leave me a comment on the YouTube afterward, maybe for a future discussion. But everybody, thanks for giving me your time today. I'm going to let you go enjoy the rest of our presentations for the rest of the day. As you do go, few final recommendations. There are resources outside of these discussions. Number one, make sure that you're following Mike and me on X. You can find Mike there at Mike Fairborn CS. You can find me on X at Cameron May CS. But it's the best place to connect with your favorite presenters in between the live streams, and it doesn't cost anything to follow us on X. Also, it doesn't cost anything to subscribe to our Trader Talks channel, which you can do by clicking on the subscribe button right down below the display window right now. But the Trader Talks YouTube channel is the very best place to find our previous webcasts all organized into lists by topic, what we call playlists. You can find those right here. Or, of course, you can also join the live streams. All right. Thanks, Mike, for helping out in chat. Everybody, thank you for all of you who've already clicked the like button. I can see of the 78 people watching right now, 21 have already clicked that like button. That always sounds like applause to your presenter. It helps the presenter get a boost in the YouTube algorithm, reach a wider audience. Thanks for doing that. Make a habit of it. If you enjoy a webcast, click that like button before you leave. But everybody, go have a great day. I'll see you in a future webcast. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.